right, welcome to Talkin Investing. I'm Tom, and as always, this is not financial advice. Today, I'm going to do something a little different. I want to talk about a company, a Bitcoin mining company that I think is in big trouble. So I will explain that in detail. Of course, this is not financial advice, but I want to throw this red flag up because they say it themselves in their own financial statement. So I'm going to go through what's going on with them and what their problems are, and we'll talk about whether or not this company can survive. So if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, I appreciate it. Lastly, if you guys want to be a member of the channel, you can hit the join button on YouTube. Members get some members-only content in addition to once a week we do a members-only live stream. Also, the members get to pick one video a week that I will do a deep dive on. So we'd love to have you join us. Okay, let's talk Bitcoin. As we know, the Bitcoin miners are distressed. This Bitcoin miner, I'm going to read from their 10Q that they just filed. This is for the period ended 9/30/2022. Because there is a risk as to our ability to continue as a going concern for a reasonable period of time, an investment in our common stock is highly speculative. Holders of our common stock could suffer a total loss of their investment. Our ability to continue as a going concern is dependent on our ability to generate profitable operations in the future and or obtain the necessary financing to meet our obligations and repay our liabilities arising from normal operations. So that's the main thing I'm going to focus on. They have two problems. They have a cash flow problem as far as their cost per coin on a monthly basis, but when we dig in, you're going to see the real problem is their debt. They have a gigantic debt problem, and this is what is putting these Bitcoin miners at risk. You'll notice it's the companies that took on debt past which they could service that are in trouble right now. So the company I want to dive into is Greenidge Generation Holdings, stock ticker GREE. This is the old support.com for those of you who remember back in the merger days about a year and a half ago. So this stock's been a bit of a nightmare all the way along. To put it in perspective, if you were a support.com holder that bought this stock because they announced they were going to merge with GREE, you're now down 99.9%. I'm guessing there aren't many of those people left. I would hope that they long got out since before they suffered that level of loss, but that's one of the most drastic downward movements in a stock I've ever seen. I can't sit here and say these guys are going to go out of business. They could very well restructure their debt with the bank and or find another source of capital. GREE's down a little bit less than 6% right now. It's trading at 65 cents. To put it in perspective, the 52-week high on this is $22.45. The numbers get crazier the further back you go. But again, I'll stick to this 52-week window. So today's range, we didn't quite hit their low. Their 52-week low is 62 cents. Today they got as low as 63.99 cents. So they're bouncing around very near their all-time low. This leaves them with a market cap of $29 million right now. So for those of you familiar with the channel, I like to put the market cap in perspective because sometimes the stock price doesn't tell the story, but market cap does not lie. This is a company that on the day they did their merger with support.com, this is a $1.2 billion company. If I fast forward all the way even to March of 2022, this was still almost a $500 million market cap company, $480 million. So you see, they've gone from that in March to 29 million right now. So this stock has been clobbered. We will take a look at the actual chart later, so you can check the chapters below for that if you want to jump ahead. But I want to talk about what's gone wrong with this company. Okay, so two things. The first problem, which you would think is the bigger problem, you're going to see this company loses money. Their net loss was $23 million for the quarter. Their total operational expenses are $46 million against $29 million of revenue. They have some other sources of revenue, but this is a company that is losing money. So I want to go to some analysis that I did. Okay, this is Greenidge, their Bitcoin mined by month. The first quarter of the year, they reported in bulk as a quarter, and I think they mined 561 Bitcoin in those 3 months. For the rest of the year, they've been giving monthly updates. So this is what's gone on the rest of the year. So you can see they're actually one of the top 10 Bitcoin miners from a production standpoint. So they've kind of settled in here. As the difficulty level's gone up, they've had trouble increasing their exahash, and I don't think they're going to be increasing it anytime soon. So you'll see the last few months they've trended downward a little bit, and that's just pretty much in direct correlation with the increase in difficulty level on the network of mining Bitcoin. So they peaked at 301 Bitcoin mined. They did 269 in October. So, you know, these numbers are okay. Again, this puts them solidly in the top 10 publicly traded Bitcoin mining companies in North America. Okay, then if I go through quarter by quarter, you'll see healthy growth. 561 in the first quarter, 622 in the second quarter, 866 in the third quarter. So That's a good trend. However, the fourth quarter is likely to go down, again, because the difficulty level has gone up and they really don't have the money to add capacity to their mining. So the mining hash rate has leveled off. So I expect some number similar to but less than what they got in the third quarter of 2022. But here's where the real problem comes in. This is their cost per Bitcoin by quarter. This is just in cash what it costs them to mine one Bitcoin. So you'll see in Q1 it was about $15,000. In Q2 it popped up to about $18,700. They did get that down a little bit, but in this last quarter that they just finished, their cost is just under $17,000. The problem with that is Bitcoin is trading at less than that right now. So this does not include their general and administrative expenses. This does not include their interest expense. So they're already upside down just paying their direct costs. There's no money left over for their indirect costs. One of the things this company needs to do is work on their direct cost per Bitcoin. Because if Bitcoin is going to hang out at around $20,000 here, they're not making any money when they mine a Bitcoin. But more importantly to that, we're going to switch over to their debt. Okay, so their bigger problem. This is the problem that I'm not sure that I understand how they're going to solve. Not saying that they can't solve it. How are the banks and lenders going to deal with these Bitcoin mining companies that they have lent a lot of money to that don't have the ability to pay it back right now? Is there going to be flexibility in restructuring these loans? Are they going to call these loans? If they default on their loans, you're going to see that's a problem that potentially leads to bankruptcy. And that's why they put that note in their financial statements that you may lose 100% of your investment. If we look at their total current assets, they have $54 million in current assets. $28 million of that is in cash. This is as of September 30th. This is their latest and greatest financial statements that they just issued. So with $54 million in current assets, they have $98 million in current liabilities. They have twice as many liabilities almost as they do assets to pay. And these are current liabilities, which means they're due in the next 12 months or less. Accrued expenses of $15 million continues to grow, so that means there's some bills they're not paying. But worse than that, long-term debt, the current portion, there's $73 million worth of their long-term debt that's due over the next 12 months. And you can see they don't really even have money to pay their regular bills. How are they going to come up with this extra $73 million? Again, this is not financial advice. I'm not saying this is impossible. I'm drawing up to you what the problem is that these guys are facing. And it's a serious problem. And they are not alone. This is not the only Bitcoin mining company that is in a very similar situation to this. Past the $98 million in current liabilities, they also have another almost $100 million of long-term debt. So they have a couple $100 million in debt, and I don't know how they're going to pay it. And I'm going to go to the debt and talk about, there's one particular sentence in here that's a big problem. Okay, Master Equipment Financing Agreement. I just want to read this one paragraph. The borrower's obligations under NYDIG financing are as follows, so this is the important part, and it goes to the next page. Agreement are fully and unconditionally guaranteed by Greenidge. So this is a recourse loan. So this is not isolated to the equipment that they borrowed it against. This is full exposure to the entire company. So unfortunately, at $81 million on just this one loan, that is a gigantic problem that I don't know how they're going to solve. Now, a lot of this is priced into their stock. Their stock is down incredibly. So we're going to take a look at their chart. So now it just becomes a decision for the investor. This is where you guys need to do your due diligence and say, okay, is there a chance they're going to get out of this? And does the potential reward outweigh the risk that they've told me in their financial statements? There's a risk that this year their stock could go to zero. Having said that, obviously the upside is unknown. So what's the reward if they can get through all of this, if Bitcoin rallies, if they refinance their debt? So these are the questions that need to be answered. Obviously, I don't have the answer to these questions, but let's take a look at the charts and look at what the stock is actually doing. Okay, so I'm going to start zoomed out on the 1 week time frame. If I go back to November of 2021, that's 1 year ago. This stock was as high as $30.62. Now that is about 1 or 2 weeks outside of the 52-week range. So this is actually about 54 weeks ago. But if we measure from there, you can see they are down, essentially they're down 98% in the last 1 year. Even if I go all the way to March of 2022, so that's getting pretty current, that's this year, they're down almost 95% from March of this year until now, which is the middle of November. So the year 2022 has been continuously a beatdown on this stock. 95% in this 6 or 7 month window is a catastrophe. So obviously they are not alone. The Bitcoin mining industry in total, all of the Bitcoin miners are down somewhere in the neighborhood of 90% off of their highs, some of them even worse. But Greenidge is among the worst of all of them, just as far as the stock performance goes. I'm zoomed into the 1-day time frame, so this is a little bit more of a close-up look at what's happened recently. So the first red line on here is at around $2.40. That was their all-time low that they hit when Bitcoin flash crashed to its all-time low in June of 2022. So since they hit that all-time low, they're down about 74% from their all-time low from what really dates back to June of 2022. Okay, so fast forward all the way to October. If I go from the beginning of October until now, so that's just 1.5 months. Greenidge is down 70% in the last 1.5 months. So the pain continues on this stock. And from my perspective, I don't see why it would stop here. So obviously they've hit a new all-time low, somewhere in the 61-cent range. They're trading at around 64 cents right now. So they're retesting that low from just about a week ago. So we will see. We'll see if this will hold. I'm seeing no indication that support is going to be established on this stock. I am worried this stock is going to continue to set lower lows. They have been setting new all-time lows for the entire year of 2022, and I don't see how their situation has improved. So one of the things that could happen is be careful and watch out for a press release. If they have a major announcement that they've been able to restructure their debt in some way and find some other significant source of cash flow where they get money in the door to cover this, then, those would be the things that could cause the reward side of this in the risk-reward equation. So I don't know if any of those things are out there. Obviously, I'm sure management's working as hard as they can, but they find themselves, in my opinion, in a very deep hole. So to me, I'm very worried about this stock. Again, this is not financial advice. You guys got to decide if this represents a good buying opportunity or if it's something you want to stay away from. But I wanted to show you and go through in detail because there's some specific reasons why this stock is down the way that it is down. Okay, so that's all I've got in Greenidge. Thanks so much for watching. Remember to subscribe to the channel. Also, you can join the channel and become a member. It's $5 a month, so we'd love to have you. Thanks again, and we will see you in the next video.